Is the stock market bouncing back after a tumultuous period? If the U.S. stock futures are any indication, the answer seems to be a resounding yes. Thursday signals a rebound following the worst sell-off in months on Wall Street. Investors appear to be recalibrating their timeline for rate cuts from the Federal Reserve, and they're also preparing for a heavy-hitting round of megacap tech earnings. Futures tied to the benchmark S&P 500 rose by around 0.3%. Meanwhile, those on the blue-chip Dow Jones Industrial Average hovered above the flatline, indicating a potential resurgence. The tech-heavy Nasdaq Composite, which suffered a more than 2% decline on Wednesday, is also showing signs of life. The financial world is never static, and this week is no exception. With the Nasdaq Composite pointing up by about 0.5%, it seems the market is finding its footing. What's the latest from the Federal Reserve, I hear you ask? Well, it's been a whirlwind, to say the least. As we know, Wall Street has been recalibrating their timeline for rate cuts. Fed Chair Jerome Powell has been instrumental in this shift. While he's signaled a pivot in the central bank's rate plans, he's also delivered a wake-up call to investors banking on quick interest rate cuts. He's suggested that it's unlikely the bank will begin to cut rates at the Fed's next meeting in March. This was a curveball for many, as earlier this week the outcome of that meeting was seen as a bit of a toss-up. Fast forward to today, and investors are now pricing in about a 2/3 chance of another hold at the March meeting. And looking ahead to May, the bets are on a small, or perhaps even larger, cut. So as Jerome Powell hinted, quick interest rate cuts might not be on the table just yet. Big tech is on deck. What can we expect? As we delve into the financial landscape, we find ourselves in anticipation of the upcoming earnings reports from industry titans like Apple, Amazon, and Meta. These tech behemoths are set to reveal their performance, providing insight into their financial health and future prospects. Earlier this week, we witnessed how the first batch of big tech results impacted the market. Microsoft and Alphabet, despite their stronghold on the industry, fell short of investor expectations. This led to a noticeable dip in their stock performance, adding a layer of suspense to the upcoming disclosures from the rest of the Magnificent Seven. With the financial world hanging on every digit, every percentage point, the stakes are high. These companies, their successes and shortcomings, can shift market sentiments, influencing not just individual stocks, but entire indexes. With the Magnificent Seven taking the stage, all eyes are on these tech giants. What's the latest on the job market? Well, tomorrow we'll get a peek at January's job market with the non-farm payrolls report. This report is a significant indicator of the overall economic health and is closely watched by economists, investors, and the Federal Reserve. Now let's talk about some recent developments. A January job cuts report from staffing firm Challenger, Gray & Christmas showed an increase in layoff announcements compared to December. However, compared to the same period last year, it's down by 20%. Initial jobless claims data also indicated a slight increase in first-time filings for unemployment insurance. Despite this, the overall level of initial claims remains near historic lows. Fed Chair Jerome Powell recently commented on the labor market, stating that it continues to come into better balance. He noted that the supply of available workers is still lower than overall job demand. With more than one job open for each person seeking work, the labor market continues to balance out. And that wraps up our economic overview for today. We've taken a look at the stock market rebound, the Federal Reserve's decisions, tech company earnings, and the job market snapshot. We hope this information helps you make informed decisions about your financial future. If you've enjoyed this content and found it useful, we'd appreciate it if you could hit the like button below. And don't forget to subscribe to our channel so you don't miss out on our future videos. We're committed to bringing you the most current and relevant financial news, and your support helps us do just that. Stay tuned for more, and remember, knowledge is power in the world of finance. Thanks for watching.